Hello everybody, this is Matador from freetradingvideos.com. It is February 16th, 2010. It's about 8:50 a.m. Eastern Standard Time, and we're looking at the S&P 500 ETF. As always, nice little pre-gap open, and a bit of a sell-off right down into that gap close, which is interesting to watch. And we now have a run-up, a little bit better volume than the little blips over here you see, but right back to the highs around 108.90. So 109, nice mark to watch. If you look at a higher time frame, a little 15-minute chart, you can see that gap up, gap fill, very nice, and that coincides beautifully with some of the pre and post market highs from the last couple of days. So this 108.50 area, important. 109, even the 108 mark, and I can remove some of this pre and post market data to show you that a little bit easier. So this is 108, so you can see how we had held up beautifully, kind of chopped around and gapped way down, used that as resistance, and now at least we're above that, looking higher. So good to have that in our camp. And going forward, even a 60-minute chart would show that 108 area to be significant. Also coincides with the declining 100 MA on a 60-minute chart. 109 is a perfect gap fill. I can start cleaning these charts up here. I'll do that for the afternoon video. But a perfect gap fill, again, 109.70, beginning of that 109, which can be significant, and that's what we're fighting right now, with one pretty good sized test and another one pre-market. So above that 110, below that, if we start heading south and rolling over and do a complete gap fill plus some this morning, we'll be looking at the round number of 108, like I said, and then 107 to my eye is relevant. This guy doesn't seem to be as relevant anymore, so 107 mark, and then 106. That'll be fantastic. So going through the marks, really nice to have these half round numbers and round numbers working on in our favor for us. The market internals here, if I can take a run around those. So the TRIN over the last couple of days has actually been fairly high. And if you look at the broad markets, we've been marching higher over the last couple of days, or minutes here. So if I can go back to a 60-minute chart, and you see this, and the TRIN right through here has actually been rising consistently during that time frame. That's something that I'm watching right now. I need to be very careful how I buy long into this market unless I get some good opening confirmation that the TRIN is low and trending lower. That would be nice. The TRIN Q, a little bit better. It's been at least putting in lower highs here over the last few days, and with equal lows, but fairly amazing equal lows around 0.3. So that's fairly overbought in some people's eyes. So I really like it that it's around the 0.8 mark. I'd also like to see this trend lower. And the VIX, nice market internal, of course, to take apart, has also been confirming a nice rise in the broad markets. But again, we're also right back down into the support area right through here at the beginning of this perfect gap fill, coinciding perfectly with what the broad markets look like. So I like this. Just again, be careful. Make sure that we get a drop in the VIX concomitant with a rise that we're looking for, and that would be very helpful going forward today, especially with the little itty-bitty divergence we see in the TRIN. So good stuff, everybody. Take that to heart at whatever level, and we'll see if we can work our way back into the 109 right through here. 100 MA on a daily chart, and then above that, of course, the 110 mark, declining 50 MA area. So a lot to work with. Hope you have a great trading day today, and I'll talk to you around noon Eastern Standard to see how things are shaping up.